Hi there, I'm Toby, Senior Reporter at ETF Stream, and I'm joined by Matt Morgan, Head of Fixed Income at Jupiter. So Matt, you've just been on a panel, did you enjoy it?
Yeah, it was fantastic. I thought some really interesting panelists, some great questions. So yeah, always a real joy to be at this event.
So why did you come into active ETFs and why government bonds?
Yeah, well, we were really surprised in first quarter about the interest and the positivity that the reaction, from our announcement got in the market. I think there is a lot going on at Jupiter. We have been really thinking about how we make sure that our active investment excellence is brought to as wide a range of clients as possible. And this is just one part of that. We're doing a lot more in institutional than we were doing 10, 20 years ago. A lot more bespoke products for our clients, bespoke mandates, etc. So the ETF is just another way of taking that talent to market. I think with ETFs, we have seen growth in active ETF market. We're not sure where it's going to go from here, but we are seeing a lot of interest. And therefore, for us, the really key thing to say to investors or stakeholders, etc., is that when I go back to my desk this afternoon, the investment team's still doing what it's always done. Choosing different countries, choosing the duration of their portfolios. Active ETF is not such a huge difference. So this is just really a way of taking what we've always done and giving it in a different sort of channel, if you like.
I think one of the reasons that there was a lot of hype about your entry into the market is because Jupiter's seen as a truly active manager, and a lot of the active AUM and even incoming entrants now are much more like benchmark hugging, index plus. So I think you guys coming in with obviously a long history was quite unique for the market. One development we've seen recently, which I guess wasn't around at the time you entered, was semi-transparency. So now regulators are allowing active managers like yourself to do ETFs without disclosing holdings to the market on a daily basis. Is that a structure that might appeal to someone like Jupiter?
I think it's a really positive development. I mean, just to echo your comment, when Jupiter does any product, in any kind of channel, any kind of structure, if you like, everything we do will always be truly active. We are not using ETFs as a way to start doing passive or benchmark tracking or tilts, etc. It always be truly active. And that's why I think what we bring to the market is slightly different. But you're absolutely right as well that, for some managers, and there's a huge amount of variation across Jupiter, let alone the whole active market, the idea of having your positioning, available every day, the risk of being front run, the risk of being copied, it is a thing, right? We do have IP and we want to protect it. So I think that semi-transparency, while still not taking away from any of the great benefits of the ETFs, like, the pricing, liquidity, transparency, etc., I think is a really, really positive thing and will just allow us to bring more to market.
So semi-transparent ETFs in the US haven't gained much flow, but they're very constrained into what they can invest in, basically US assets only. Do you think one of the often touted benefits of ETFs is high levels of transparency and something that investors are said to really appreciate? But surely that's something they're willing to sacrifice if they think the product that maybe they can't see the holdings on a daily basis might deliver good performance over the long term?
Yeah, as so often this is about providing client choice. Clients that insist on transparency for you to make that selection. I think that clients that really like ETFs, see the value of an asset class where there is, a provider bringing something, genuine edge, genuine alpha, at the cost of some transparency. We will be totally transparent about the transparency, if you'll excuse the comment. And I think it's really up to the individual investor, right? They can make their own decisions.
Final question, can't help but ask, but where do you see the ETF market being in 5, 10 years and Jupiter's place within that?
Well, specifically talking about actives, I think that we're seeing growth. That growth will definitely continue. The really interesting question for me is where. I think that if we're talking about the idea of being truly active, which there isn't actually a market in ETFs, in my opinion, right now, I think that there are clear areas, for example, in high yield, where it doesn't make sense being passive, in my opinion, because you have that default risk that we can take away and give and try to give alpha on the back of that. Or, for example, in areas like smaller companies or different parts of the market. So I definitely see growth there. Where we're unsure is products that, for example, like, flexible bond funds, for example, fantastic in mutual. We don't know if they'll have a place in ETF, but we're watching it very carefully. But in an ideal world, in 5 years, I think active will continue to grow. Active has a place in the market. It can be delivered in an ETF, and we would like Jupiter to be playing a big part in that as we go forward.
Great. Thank you for your time.